Hey everybody, today we take a look at the cup and handle formation. It's easy to spot. A lot of new traders like to use it, although it sometimes isn't used properly. So we kind of shed some light on that. And if you like this content, please stick around after this quick clip. You'll be able to find out more about who we are, what we do, how to find us, or zap the QR code you see at the bottom right-hand side of the screen, or just go to algofactory.tech. There is a chart pattern that Gold has created. It's called the cup and handle. It's a little bit skewed. It's not perfect, but then again, so I don't know that I want to rely on that completely, but I will demonstrate the cup and handle as it is and as it should be, right? Two different things. So let's talk about the cup and handle pattern. Okay. Now, cup and handle pattern, just my opinion, high time frame, not a bad thing to use. When you get to low time frame, it's still not bad, but when it comes to like smaller assets, cryptocurrencies, things like that, those kind of chart patterns can be manufactured. I'm not saying for sure that it happens, but I've seen so many of them fail on the, on smaller assets with people who are looking for cup and handle, because it is kind of a newbie formation, right? And a proper cup and handle would have had price go all the way up to about here and then form your cup. And your cup would look like this. Okay, and then the bottom of the cup is the low point of the move down. And then you have, give me 1 second here. Sorry about that. Then you have your handle, and your handle is going to look like this. Okay. And then the low point of this, it doesn't have to be this perfect arc, just needs to come down, and there's people with different opinions on that, but I do have certain requirements. I want the handle to be no more than 50% of the cup, and some people say 30% or 33%. 50% I think is fine. And the story that Price would be telling, now it didn't exactly happen like this. As you can see, Price actually didn't form that left part of the cup so well. So the thing is, though, is that you're talking about a 10-year span of what's happened here, and the market has changed drastically, fundamentally in that time. So we could argue that that fundamental change has distorted our cup, and the cup is still valid, right? So I mean, it's an argument, but there are better ways to handle that, and we'll get into that. So for now, though, we'll go on the cup and handle, and we'll see how I would normally measure that, right? So if this cup and handle were, let's just say we're going to handle it this way, or if it did properly form, I would use a fib extension tool. Okay. And I would start at the top, go down to the bottom of like the apex of the handle, and I move out to the side and go back to where I started. I screwed that up. Hold on. Sorry about that, folks. I would start at the apex, head to the cup rim, and then back down. Sorry about that. And those are fib levels, right? And so price tends to go to these fib levels. Now, I don't know if it's some magical thing in the market. I don't know if it happens. It's like a self-fulfilling prophecy. Everybody's looking at fib levels. It's really hard to say. But there's no price history to base what might happen next, right? I mean, this goes all the way back to 1833. And there's no time the price has ever been as high as it is right now. So all we can really do is try to maybe use fib levels or, some other quantifiable method, like I said. So that means that if this cup and handle were to break out, then chances are it would either reject at these fib levels, or make like a stop and then go past, or they might even break above, and so they could just go straight through. They don't necessarily have to stop, but this is a pretty long time frame move, and this could happen much more quickly than what I just drew, because I have this going out to 2028. If something were to happen, like I don't know, some kind of crazy wars, or this could shoot up instantly. In fact, one of the things to understand, like on 9/11, for a short time, gold became literally priceless. No, like on the exchanges. So but you could see something like this happen, and the height of this is about $3,000, and then the main stop off is going to be around 2650. That's your 1.618, which is your most common fib level for price to go to. And then you have your 1.272, which if the move isn't that strong, it could reject and head back down. But my opinion is that once gold breaks above this kind of all-time high area and stays above it for, say, a month, then, or even a few months, then we have a chance at this being the actual breakout of this, decade plus long pattern, right? Hey everybody, Cowboy here. Thank you for joining us today. Don't forget you can go over to www.algofactory.tech, zap the QR code on the screen, get us on Twitter at algo_factory777, and don't forget we help people become traders. We help also to put people on the road to creating an algorithm that you can automate if that's what you would want to do. You can walk away, trade, it's a beautiful thing, and limited time, $49.99 a month for the membership. We hope to see you there. Thanks.